Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with legendary investor and entrepreneur and coach, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael.
Hey, how? I wanted to bring to you a survey out of a group called Tiger 21. Right, Tiger 21, as you know, but for the audience, um, is a pretty select group. You have to be invited. And B, the minimum net worth is a deca millionaire. So we're not talking seven, we are talking eight figures. What they do is every quarter they release a survey of what their members are doing. So I got a copy of it this morning. I thought we'd go through it together.
Yeah, man, let's do it.
All right. So first and foremost, let me get my notes out from this morning. 65% of their members believe that inflation will accelerate all year. So not transitory, but also not rolling over. They believe that inflation is going to accelerate in 2022. Does that surprise you?
No, not at all. We've seen it coming, since probably the end of 2021 when we really started to see it, realize that this is not transitory. That this a lot of this is permanent.
Yeah. It's again, I got the summary, not the actual report. So maybe this is in the details. I do think inflation rolls over this year, right? Like, for example, CPI or PCE or whatever your favorite metric is. We'll just do CPI because that's what the average person looks at. I think the CPI could maybe peak at government reported 8.1, 8.2. I think it probably peaks April, May of this year. So again, I think it rolls over. I don't think we go from 8% in April to 9% in December. That said, I think inflation is still above 6 in December. So I do think it rolls over this year or peaks. I don't think it accelerates all year. What do you think?
Yeah. And, I don't think it's going anywhere anytime soon. I mean, we are seeing permanent inflation in a lot of areas. Now we've seen wages go up. What would be an interesting thing to do, I know you like to chart things,
Yep,
would be to go back and look at the inflation over, last 50 years in relation to wages.
I have it. Yep.
And the dollar. So a lot of people think, the
I don't
dollar
have
is
the
getting
dollar.
weaker
Yeah.
because of inflation, this, that, and the other. But wages have gone up historically. So it'd be interesting to see what that ratio looks like of the dollar versus inflation versus wages, as they go up, because it's really, really interesting.
Yeah.
It's an interesting study. But yeah, it's here to stay. We'll see some things that are temporary and transitory, get hopefully through the pandemic. If we can ever get that stupid thing behind us and get fully back open, that, as the economy recovers and we start doing better, that can drive even more inflation. So the better we do from a recovery standpoint, even more inflation we can see. So really the only way to stop that is to raise interest rates, and suck liquidity back out of the market. To kind of curtail it. So, that creates inflation of its own. So you have inflation, plus you have rising interest rates. That's a double inflation.
Yeah.
It's a tough dilemma that we're in right now.
Yeah. I totally agree. I think inflation is here for the year. I think we get when you look at a chart 10 years from now, the peak will be sometime this year. That's, I guess, what I'm saying, which I'm sure they agree with. Again, I did not read the entire report, just the summary. Next, because they believe that, they are focused on, three things, two different segments. One, not shockingly, is real estate, right? Especially real estate with fixed rate debt. Again, if you own real estate with fixed rate debt, the asset goes up, rents go up, but the debt structure doesn't. So they like that. And then the other one they called out was stocks with pricing power, which obviously I think is interesting. They brought out Amazon and some other big, like Apple, with pricing power and profit, right? The unicorns, as they're often called in the Silicon Valley, right? $billion valuations with negative earnings are going to get hurt, just like the .com crash. Kind of thoughts on that?
Yeah. All the non-income producing stocks that just went through the roof over the last year.
Yeah.
We're already starting to see that unwind. Kathy Wood's, funds, everything she's invested in is pretty much tanking. And that's nothing against Kathy. It's just she bought at the top. And, the argument was, hey, in 5 years, they'll be worth twice as much. And, the valuations didn't make any sense when they were bought. Also, betting on the Fed keeping, doing what they were doing. So without the Fed, those things just can't sustain. And we've seen the SPACs, we've seen, instant unicorns for any asset that IPOs. So without the Fed, those things are gone. It's just not going to continue. So you have to look for value now. And she's saying that these stocks are in deep value territory. So you need to understand CNBC, Bloomberg, people like Kathy Woods, they have to maintain a narrative because that's how they make money. If they don't have money coming in, they don't make any money. They get paid on assets under management. She says that she's fully invested in the funds as well. So, those things are down, but, don't be fooled. She's made a couple $100 million or more in fees over the last few years with this fund. Mm-hmm. So that's where their bread and butter comes from. So they have to keep new money coming in. That's the only thing that sustains it. And, she's calling these things in deep value territory, and they've only corrected, across the board, 8%. A lot of these, tech funds, some of them have corrected a little bit more than that. But, I don't think we're in value territory on those things yet.
No, I don't think so either. And actually, I called out Kathy Wood about 90 days ago saying that, she's going to be like Peter Schiff. Peter Schiff's always said, buy gold, buy gold, buy gold. And if you don't change your strategy, eventually the market's going to go against you, right? I actually put out a survey on my channel, is Kathy Wood a legend or lucky? And the answer came back 80-20 lucky, right? She went in right as the Fed was basically, the Fed put was in full effect, explosive growth, number one money manager 2 years in a row. That's really hard to repeat a third year in a row. I think the last time I saw her stocks were down, her ETF was down 48% from the peak or something like that. And she has a very sexy marketing strategy. She's like, I'm in this for 5 years, 5 years. Deflation is coming, blah, 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 blah. I'm like, that is really cool. All you have to do is say 5 years and everybody gives you a pass. How many people can hold? I mean, the individual person like me and you, we're not going to hold for 5 years most of the time, either in a big win or a big loss. We're going to sell out. But she can keep saying 5 years and she gets a pass.
Exactly. Yeah. Our strategy is 5 years. So that kind of eliminates any market, fluctuations, which arguably, in a bull market makes sense. I mean, the markets have done nothing but go up for the last, 10 years, but they do correct along the way. So that 5 year exit, again, you got to know the top, not the bottom. Mm-hmm. Nothing wrong with exiting your positions at the peak and then re-entering. And even if you have a 5 year horizon, then you're just increasing the base of your assets in the fund. So, the whole diamond hands hodler mentality for stocks or crypto or anything like that, isn't always the best strategy depending on when you get in and, when you're exiting. Now, a lot of these markets, a lot of these assets have all been, straight up since inception, but almost everything is.
Yeah. Yeah, I think it's pretty interesting. Next up for the ultra wealthy, which was really interesting, why I wanted to talk to you about this, was crypto. They're saying, again, these are eight figure folks. 10 million to 1 billion is the range for the Tiger 21. It looks like they're moving into crypto. 34% will be increasing Ethereum, 33% Bitcoin, with the rest into an ETF or basket. I was actually surprised to see that these individuals are making big commitments there versus the traditional gold, right? What I've seen in a lot of my analysis, Greg, is frankly, if you're over 50 or thereabouts, you're gold. If you're under 40, it's crypto, right? One's digital gold, one's not. So it was interesting to see that these folks are talking about crypto and actually not the yellow metal. It was not in the report at all.
Yeah. Gold is old news. I mean, gold's day is come and gone. And, it's basically, it might be somewhere you can put your money and not have to worry about it, but gold's no more sexier than a treasury right now. So it could do worse, as other assets like crypto and things like that, gain more liquidity, gold could go backwards and start heading the other way. And, the younger generation's taken over. So like you said, the gold bugs are traditionally an older crowd. I remember when I was in my 20s and 30s, all the older guys were, gold bugs, and they were right. Gold went up for a long time, but gold has underperformed pretty much everything, in the last
I think all year. Yeah.
Well, last 10 years, probably it's been one of the, underperforming assets. And, crypto is just a space that's growing and it's going to continue to grow, but you got to understand what that is. There's a big difference between Bitcoin, Ethereum, altcoins, DeFi, NFTs, gaming. There's a lot of different areas, the metaverse, there's a lot of different areas that, cash is going in that space. So the general thesis is, and you got to understand who these investors are as well. So like you said, you got to have a minimum of a $10 million net worth, to be able to go into that. And then, people will cite, oh, these billionaires are investing in crypto, this, that, and the other. Most people are only putting 1% of their net worth into crypto, and then they're spreading it out. So you need to understand for those individuals, somebody who has a net worth of 10 million, if they put, 1%, you're not talking about a lot of money.
It's 100 grand. Yeah.
Right. That they're allocating. They might allocate $1 million, but somebody whose net worth is 10 million, if they lose $1 million, they're not going to feel it.
Mm-hmm.
Whereas the average individual is seeing that and saying, man, if they're in, I'm going all in.
Yeah.
And, that's where people mess up. And, right now, the markets, a lot of the crypto markets have, or assets have peaked here, recently.
Mm-hmm.
We've been in a big bull market, just like everything else. A lot of people in the crypto space are discounting the Fed put. They don't
Mm-hmm.
think that they're correlated or affected. In crypto, especially Bitcoin, I mean, it's joined at the hip with the stock market. And that's where a lot of that liquidity goes back and forth. And a lot of the same players are in there. And that's an unregulated, highly manipulated market. So you got to be real careful. You got to really know what you're doing and understand the cycles. And it's been peaks and valleys.
Mm-hmm.
Bitcoin especially has been taking a beating, and there's not a lot of yield in that anymore versus some of these other assets. So as that space evolves, as we get regulation and more different types of assets to invest in, you're going to see more and more allocations to the space, which takes away from other areas. So as the market caps increase, it's going to decrease in other areas, and gold's the easiest target because it's just been so boring lately. Just like Bitcoin is the gold of cryptocurrency, and it's getting
Mm-hmm.
boring. Less capital going into Bitcoin and more going into other spaces.
Yeah. The one thing I love about the crypto space, again, I have a friend of mine who's been talking about it for a decade. He's deep in it. And he's always talked about crypto being an inflation hedge and a non-correlated asset, which I, again, look at the numbers here recently. I'm like, well, A, it's not an inflation hedge because inflation is raging and it's down. Mm-hmm. And B, it's anything but non-correlated. It's correlated as hell to all this other stuff. So I think a lot of the stories that have been told over the last 3 or 4 years are at least wrong in the moment. They're not non-correlated.
Well, it's just a narrative to suck people in. Again, just like the money managers and CNBC and the news networks, they have a mission, right? Wall Street is a business, and Wall Street's business is to gain liquidity. So cryptocurrency, same thing. It takes new money to drive asset valuations. You've got to have new money. It's not a Ponzi scheme, but it is a pyramid scheme. Okay, in the sense that the only way the pyramid can stay up is if new money keeps coming in at the bottom to prop it up. So, and I don't mean that in a negative way. I just mean it is what it is. You have to have new money to keep the asset going up. And, like you said, we've seen inflation top, the market's been going down in crypto. A lot of the assets have been going down, and, it's tracking stocks. So that was just a narrative to suck in, new investors. What crypto is, it's a very dangerous, volatile, highly speculative, risk on asset, all of them across the board. And there's a difference, again, between a Bitcoin and Ethereum and altcoins and things like that. But at the end of the day, there are some great projects, some great companies. A lot of the altcoins are like stocks. They're, currencies that are issued by these companies that have these projects, that they're developing. And some of them are really good and have strong use cases, and some of them are just junk. Bitcoin is your traditional, supposedly store of value. But again, it's just a speculative asset like anything else, and it's highly manipulated. And we don't know where the long-term value of that's going to land. Nobody knows. Some people will tell you, oh, it'll be $1 million. Some people say it'll be 100 million. What we saw was there was no appetite above 60, 69,000, and it was manipulated to get it to that point. That was not a retail driven boom. That was driven, by large holders, and, who knows what else was involved there, but there hasn't been any appetite, and that's why it's coming downhill. So it's in price discovery on the downside right now to figure out what is the true market value of it. And, what's the top end, what's the low end. And, people that think it's going to be worth 2, 3, 500,000. I'm not saying it is, I'm not saying it isn't, but you have to ask yourself, are you a buyer at that level? Because if it's 2, 3, 500,000, it's got a long way it can go down, and it traditionally draws down 80%, over the cycle and the history of it. So it's really interesting and fascinating. But at the end of the day, it's a risk on, highly speculative, volatile asset where there's a lot of opportunity, but you got to really know what you're doing, know when to get in, know when to get out. And, it's not something, every asset, that you can just buy and assume it's going to go up forever. So far it has, and that's been the 10-year, 11-year history of it, especially Bitcoin and most of the other, cryptos. But we're seeing now the new ones that come in, man, they'll spike and then bam, they drop and they don't come back. So you got to be very careful, especially with altcoins, because they can drop 90%. Ethereum's at, well, it was at $4,000. It's down, to 3,000. It dropped below 3,000 today. But if Ethereum sold off 80 to 90%, you're talking about another 250, $300 Ethereum.
Yeah, exactly. Well, the last thing I want to talk about, ultra wealthy or Tiger 21, the segment of the market, again, stock market that is getting a lot of their focus is alternative energy, he said. So I thought that was pretty interesting. Again, batteries and, things of that nature.
Yeah, well, everything's going electric. So yeah, there's a lot of, again, capital going into that space for, electric vehicles, sustainable energy, alternative energies, things like that. Obviously, the environment, climate change is a real thing. So, a lot of capital moving in those areas. But yeah, these are all the things that are, that's a more, safe, sustainable investment that, there's a lot of upside because we're just, in the infancy of that, space as well, just like we are in crypto. We're at the beginning in these new emerging technologies and markets.
Very cool. Well, that's what I found from Tiger 21. How can people find you?
Yeah, gregdickerson.com. That's where all my info is. And, go check it out. YouTube channel, podcast, and, talk about all kinds of things, entrepreneurship, real estate, stocks, cryptos, all kinds of stuff.
Yeah, folks, do yourself a favor, subscribe to Greg's channel. He puts out a lot of stuff that I just don't cover because he has a much broader experience than I do. Thanks, bud.